the barber shop, these kinds of kind of mom and pops are not as much the kind of things we hear from when major companies report, but they're a really important part of the economy.
Yeah, they're the majority of the employment in the U.S. economy is in these small and medium-sized businesses. And it makes sense, right? You don't need a lot of capital if you're a lawyer or a law firm, but you do if you are a manufacturing firm. So it makes sense that these are publicly traded businesses. And I think sometimes we lose sight of that because we're so fixated on, global themes like what's happening in AI or what's happening with onshoring and offshoring. So I think we lose sight of that, but it creates a little bit of cognitive dissonance in investors' minds of like, how is the economy really doing? It's hard to really gauge.
One thing that it seems that you guys kind of agree on is that, well, or maybe, Julie, I should ask you, do you think that this is a kind of environment where it favors the big getting bigger and kind of investment-wise and so on, or not?
I actually think it really depends. Certain themes are going to be really beneficial for larger firms because they have the resources to implement them. So AI, I think, is a great example where the big get bigger because you really need a lot of resources in order to make that technology work. But as a small and mid-cap investor, there are plenty of businesses that have very strong franchises in a specific niche, and they're able to execute really well on them even in a recession.
And Aswath, I'll turn to you on that because everyone was talking about your NVIDIA move. Is it correct to say that after the massive run, have you sold all of it or just pared it back?
I sold half my holding. I mean, I think that I'll hold off on the other half. But I mean, let's set the stage. This has been an amazing company. The reason I've held it is because I call it my opportunistic chip maker. It seems to find every opportunity in the market and find a way to cater to it, whether it's crypto, whether it's gaming, and now with AI. It always seems to be the first in line to be able to take advantage of it. And that can't be accidental. That said, though, I mean, the run-up has been just so astonishing that I cannot in good conscience hold on to it and call myself a value investor.
For the market overall, Aswath, you're saying you think this is a reversion to the 2012 to 2021 market. Is that a good thing?
I don't know whether it's a good thing or a bad thing. It is what it is. I mean, the reality is of the $3.1 trillion in market cap added to the U.S. equities this year, $2.8 trillion of that has come from large tech companies. And that is pretty much the pattern we saw through 2012 through 21 is the bulk of the rise in market cap of U.S. equities has come from big tech companies. So I don't know whether this is a reflection of how economies are evolving increasingly towards those tech companies or whether this is a market aberration, but it is what it is. And I think we need to accept that and start. I mean, when I see people complaining about the fact that the market is top heavy and that 60% of stocks are down or 70% of stocks are down, that has been the phenomenon we've had to face for much of the decade. It's not just 2023. And maybe we need to start to adapt our investing to the way the market is rather than trying to make the market adapt to the way we want it to be.
Well, that's not going to make anyone feel better who's already missed, a 200% pop in NVIDIA or whatnot. Julie, I'll just ask that same question to you. I know you often like to look for quality names and kind of idiosyncratic plays, but I can't imagine you piling into one of these semi-AI plays, but maybe that's where the market is.
Yeah, no, I think for us, we're long-term investors and our average hold period is 5 years, but we've owned things for literally decades. What we're trying to find are these businesses that can compound over time. And I think they exist not just at the large cap level, right? What is happening in big tech is just being able to capitalize on an important trend in the environment. But if I think of a small mid-cap name like a Bentley Securities, this is a company that does technology software for the infrastructure segments. That is a very niche focus. It's something that they can execute really well on, and they're profitable. So I agree that you really just have to be very choosy in your businesses and find ones that are durable and competitively protected.
So was it Bentley that you said? I just want to make sure we show the correct company. But I guess just to build on that, then, do you wait for the market to pull back? I mean, do you think overall valuations are too high, or do you feel, especially the way that things are trading, I mean, do you feel comfortable still being able to find stocks at these levels?
Well, I think in small and mid-cap land, you're seeing valuations that are some of them are back to 2008 levels. So there actually are interesting opportunities throughout. What's interesting is it's become, at least in the small and mid-cap land, it's become much more of a stock picker's market where instead of the narrative driving stocks broadly, you're seeing fundamentals come into play. And so businesses that are maintaining or raising their guidance are doing very well, and businesses that are having to retrench a bit are really getting punished. So, as an active manager, this has been a great time for us to focus on quality because those are tending to get rewarded right now.